China just canceled major trade deals in US dollars. And EV giant BYD has launched a global price war. Experts say this double move could shake the $40 trillion world economy and hit US dominance hard. Watch the full video for the full impact and what it means for the global market.
Okay, so let's really unpack this. Imagine a global chess match, right? But the rules, they're being rewritten like right now, right before our eyes. We're talking about a massive economic shift. I mean, truly massive. It could fundamentally reshape global commerce, influencing, well, everything from the price of your next car to the stability of, entire national economies. This deep dive, it's built from sources detailing two really bold strategic moves China has made. One move challenges the very bedrock of the global financial system. It could potentially divert trillions, literally trillions of dollars that would otherwise flow into dollar assets, dollar trade finance. It fundamentally alters global capital flows. And the other has ignited this fierce price war, sending shockwaves really through a multi-trillion-dollar global industry.
Right. And our mission here in this deep dive is really to extract the most important nuggets of knowledge from these interconnected developments for you. We'll break down the strategies that seem to be at play, try to uncover the less obvious implications, and explore what it all means for you and, frankly, the global balance of power. The goal is for you to walk away with a clear, well-informed understanding of what's truly significant here.
Okay, so let's dive into the first part then. Our sources are calling it China's de-dollarization push. We've seen China significantly accelerate its efforts to reduce its economic reliance on the US dollar, and it's happening at a pace that's really, really turning heads lately.
Yeah, and what's crucial to understand is how they're actually doing it. It's not just talk. China has started pricing and settling major international trade deals. We're talking massive agreements for energy, advanced tech, raw materials, and currencies other than the dollar. So you're seeing transactions in the yuan, the Russian ruble, even the UAE dirham. This isn't just symbolic. It's a direct operational shift away from the dollar system.
And the scale is already, well, it's considerable, isn't it? The data we're seeing reveals that over 0% of China's total foreign trade is now settled in non-dollar currencies. And that number, that percentage, it's rising rapidly. We're seeing recent deals with major partners like Brazil, Russia, Saudi Arabia, even specific regions in Africa, being conducted entirely outside the traditional U.S. financial system. That's a significant rerouting of global commerce.
Exactly. And if we connect this to the bigger picture, China's objective seems, well, starkly clear. They want to weaken the dollar's longstanding dominance in global trade and finance and gradually establish a parallel financial system that gives them more control. This is especially relevant, of course, as U.S.-China tensions continue to simmer. This parallel system, could involve expanding their own payment system, CIPS, as an alternative to SWIFT, or maybe pushing for a basket of currencies as an alternative reserve asset. Some analysts are now suggesting we're witnessing the early stages of a global de-dollarization trend, and it's one that could eventually impact up to, get this, $40 trillion in international financial flows if more countries decide to follow China's lead. I mean, that's money shifting away from dollar assets into alternatives, maybe other currencies, maybe gold.
40 trillion, that's just a staggering figure. But, given these moves, how real is the risk? Is it truly a risk of de-dollarization for the U.S., or is the dollar just so deeply entrenched that this is more like minor diversification for China?
Well, that's the core question, isn't it? The potential implications are profound. Look, if fewer nations need to hold or use U.S. dollars for trade, it could significantly reduce global demand for dollars. That's basic economics. This would almost certainly put downward pressure on the U.S. economy. Think impacts on inflation, interest rates, and it would directly challenge America's financial leverage on the global stage. And we're already observing it, actually. Central banks in dozens of countries are increasing their holdings in gold and non-dollar reserves. It signals a kind of strategic preparation, perhaps, for a world where the U.S. dollar isn't the single undisputed king anymore.
Right. So while China is meticulously, it seems, reshaping the financial landscape, they're simultaneously unleashing this other kind of challenge, one that's sending, as you said, tremors through a multi-trillion-dollar industry, the auto sector. Let's pivot then and talk about the second major development. Chinese automaker BYD's really aggressive entry into the global auto market.
That's right, BYD, the Chinese EV giant, famously backed by Warren Buffett's Berkshire Hathaway, interestingly enough, has just announced this sweeping round of EV price cuts. And it's triggered what many are already calling the biggest price war in automotive history. Seriously. They've slashed prices on their top-selling electric models, the Dolphin, Atto 3, Seal, by as much as 20%. And crucially, not just in China, but across their rapidly expanding international markets too.
And what's really striking here is the global impact, isn't it? These BYD models, they're rapidly gaining significant ground. We see it in Europe, Southeast Asia, parts of South America, and they are directly undercutting established competitors. Tesla, Volkswagen, Ford, Toyota by thousands of dollars per vehicle. This isn't just, offering a cheaper car. It feels like a strategic maneuver designed to grab market share at just unprecedented speed.
Which raises the big question, how? How can BYD do this without bleeding money? And the key, according to our sources, lies in their vertical integration strategy. It's quite remarkable. Unlike most traditional automakers, BYD builds virtually everything in-house. Their own batteries, which is huge, their own chips, their own powertrains, even the manufacturing robots, apparently. This gives them cost advantages that most rivals simply, they can't match right now. It effectively turns the EV market, or could turn it, into a kind of winner-takes-all game for whoever controls the entire supply chain. And that vertical integration gives BYD immense pricing power. And they're clearly leveraging it right now to aggressively gain that market share.
That level of cost control, it really puts Western automakers in an incredibly difficult spot, a bind, really. They face what feels like an impossible dilemma, Either slash their own prices to compete and potentially lose money hand over fist, or maintain their current margins and just watch their market share evaporate. But if BYD's cost advantage is that profound, are Western automakers simply outmatched? Or is there a strategic counterplay beyond just, pure price cuts? Even someone like Elon Musk at Tesla has warned, right, that a Chinese automaker like BYD could become the most dominant car company in the world if the U.S. doesn't respond strategically. Okay, so now when you consider these two things happening at the same time, this accelerating trend away from dollar-centric trade and this aggressive EV price war, it really starts to look like far more than just independent market forces at play. It points towards something broader, doesn't it? Maybe a more coordinated strategic approach from China.
Well, that's certainly a key insight to consider, the potential for a deliberate strategy here. China does appear, based on these moves, to be executing a kind of coordinated plan, one aimed at weakening American economic leadership, operating simultaneously in both global finance and high-tech manufacturing sectors.
And our sources, they seem to outline what looks like a three-pronged strategy. Step 1, gradually undermine the global dollar-centric financial system. We've talked about that. Step 2, strategically flood global markets with cheaper advanced technology like these EVs. And step 3, build long-term influence. Through extensive trade, infrastructure projects, think Belt and Road, and expanding digital platforms.
And the evidence suggests, this strategy is already yielding results. It seems to be working, at least in part. We're seeing dozens of countries expressing significant interest in joining BRICS initiatives, like the New Development Bank, which offers alternatives to Western-led financial institutions. Or they're actively exploring China's digital currency, the ECNY, for cross-border transactions. All of this effectively cuts the dollar out of major energy and trade deals. And then simultaneously you have BYD's expanding market share, putting immense pressure on legacy automakers globally, many of whom are still, frankly, struggling to scale their own EV production and secure those crucial battery supply chains in a cost-effective way.
So if this trajectory continues, the potential future scenarios are, they're significant, very significant. The U.S. could find itself less financially dominant, less industrially competitive, and maybe increasingly reliant on various global players for both essential goods and, importantly, capital flows. Okay, so with all of this in motion, what does this mean for the U.S. response? How are policymakers reacting to these really dramatic shifts?
Well, U.S. policymakers are certainly watching very, very closely. And they're weighing some complex decisions, no doubt. On one hand, you see Congress actively considering new tariffs on Chinese EVs and batteries. That's a direct response, right, to the commercial aggression. But on the other hand, you have Treasury officials openly warning about the long-term consequences of a multipolar currency world. They're acknowledging the challenges to dollar dominance that, frankly, haven't been seen in decades.
Which really raises a big question for you, the listener, to consider, doesn't it? Is America poised to counter these challenges with, say, a renewed focus on innovation and direct competition? Or will it lean more heavily on tools like sanctions, regulation, maybe defensive measures to try and maintain its global economic edge?
Yeah, I think the overarching message from all these developments is pretty clear. The global balance of economic power is undeniably shifting. It's in flux. The U.S. dollar is facing its most significant challenge in generations, no question. The global car market is being fundamentally rewritten as we speak. And China, through this combination of Sophisticated financial strategy and aggressive commercial expansion seems to be actively leading the charge in both of these critical areas. The next decade may indeed look profoundly different from the last one.
It really is a complex, multifaceted economic reshaping we're witnessing, from the very foundations of global finance all the way to the assembly lines of entire industries.
Absolutely. The information we've discussed in this deep dive certainly suggests that the very nature of global economic leadership is undergoing a fundamental transformation.
It truly does. So as you look ahead, maybe something to think about is, how do you think these deep economic and industrial shifts will influence not just global trade and national policies, but maybe the everyday choices and opportunities available to you in the coming year? Something to ponder.
Thanks for watching Global Mind News. If you found this report helpful, make sure to like, share, and subscribe. We bring you the facts, insights, and updates that matter, straight from the source. See you in the next report.